Okay, guys, see, we are done with the second part of the chapter. Deductions are done. Okay, now disallowances are there. Those disallowances we are going to do now. First disallowance is section 38, which you already know. I have already told you any expense, any depreciation relating to the assets. Am I talking only about expense? No, depreciation also. So any expense, any depreciation related to your assets will be fully allowed if the asset is used only for the purpose of business or profession. What if the asset is used for purposes other than business, other than profession? Then the proportionate amount of expense or depreciation which is related to use of the asset for the purpose other than business or profession will be disallowed. That is given in section number 38. I have already explained you while doing section 30 and 31. Yes or no? So, sir, tell me. Expense or depreciation related to assets. Expense or depreciation, you will have to calculate proportionate amount. Calculate the proportionate amount. This proportionate amount which is in relation to use of such asset for any purpose other than business or profession. This proportionate amount will be disallowed as per section 38. Section 38 done. Okay. Now let's come to next disallowance. Next disallowance is given in 37 2B. Now see, first of all tell me, advertisement expenses. Yes or no? Advertisement expenses should be allowed or should not be allowed? Should be allowed, provided the advertisements expenses incurred in connection with my business or profession. So this expense is, but if the advertisement expense is incurred on, what happened? Deactivated. Why it is happening like this? I don't know. Just now happened. No? The students told you. The student sir is stuck. Audio is coming now. Students, sir is not stuck now. Please check. Audio is audible. Video is visible. Can you listen to me? Can you? Okay. Keep it this way only, no? Keep it this way. What? Why automatically? Okay. Okay, no problem. Alt tab. Okay. I'm looking nice, no? Without beard, I don't like myself. You all seen me for the first time without beard, no? In beard, I look like rowdy. Okay. My father tells me that. My father, my mother, no? They always tell me, shave your beard. This time, I had to. Why? Because before coming here, no, I was trying to give a shape at home only. You must have understood what would have happened. All of a sudden, my amma called me to have lunch. So I walked like this, gone. Thank God this is saved. Otherwise, Bangalore visit I would have cancelled 100%. I don't go out without this. At least this is saved. I feel as if I am not wearing any clothes if it is not there. So my mother, no, when she saw me after a long time, after I guess 6-7 months, after 7-8 months, I had removed my beard. She saw me and what she did, you know? She did like this. I said, what has happened to you all of a sudden? She said, you are looking very fair. I said, what is to be done by looking so much fair? She was like, you look really nice, you look really nice. So I said, what? How I am going to go out now? I feel so shy, you know, without beard. Okay, let it be. So it has started coming. So now feeling a little bit good that okay, it is coming. Sometimes I wonder that what if you shave your beard and it doesn't come only then? Oh my God, I cannot even think of. Okay, see, advertisement expenses. Sometimes you incur these advertisement expenses on what? Pamphlets. Pamphlets, you know, na? Pamphlets. Then brochures, newspapers, souvenirs. Souvenirs, you know, souvenirs. Keychains, pens, umbrella. So, these are known as souvenirs. Some diaries are there. So, the things which you can keep. Okay, now. So, advertisement expenditure is incurred by the assessee. Now, this advertisement expenditure is incurred on pamphlets, brochure, newspaper, souvenirs of any political party. So pamphlets of the political party, souvenirs of the political party, you are getting them printed. Possible, no? I might support some political party, some politician might be my good friend. Okay, so now elections are coming, so he told me to give donation to the political party. I said, no, I will not give money. Tell me what is to be done. So he said that get these many pamphlets, get these many pamphlets printed, get these many brochures of the political party printed, or do one thing, these many pens or these many keychains, you get it for the political party. So, while doing that, what I will do, I am a businessman. So even if I'll spend money on those pamphlets, I will write below that pamphlet with best compliments from RK Builders. So assessee is RK Builders, getting the pamphlets etc. printed for political party, but at the same time he gets himself also advertised. Somebody holding that pamphlet will come to know that this pamphlet is, the cost of this entire pamphlet is made by RK Builders with best compliments from RK Builders. So RK Builders is what? Spending money on advertisement. But advertisement I am getting done in brochures, pamphlets, newspapers, souvenirs, etc. of any political party. Now, whenever I'll spend this amount on the advertisement, this is as good as donation. Donation to political party. For that, a separate deduction is allowed under chapter 6A. So if you are making any donation to the political party, for that a separate deduction is available under chapter 6A, 80 GGB. Yes or no? And that expenditure you are claiming here also as your advertisement expense, we are not going to allow that. Even this type of advertisement expense will be disallowed. So any advertisement expense other than this you can claim as a deduction, but not this advertisement expense. Yes or no? So this is disallowed. So out of all the disallowances, two disallowances. Number one, section 38, proportionate expenses and depreciation will be disallowed. Second, even the advertisement expense you cannot claim under the head PGBP from your business income. This advertisement expense we are not going to allow as a deduction. 37(2)(b) says that it will be disallowed if it is incurred on brochures, pamphlets, souvenirs, newspaper, etc. of any political party, because it is considered as donation to political party. A separate deduction under chapter 6A is available for this type of donation. Then if you are going to claim that amount under chapter 6A, why are you claiming it under PGBP head as your business expense? If you are not disallowing it here, what will happen? You will claim this deduction twice. Once under chapter 6A GGB, and second here also under PGBP head. So don't claim here, because anyways you are going to claim it as a political donation over there. Yes or no? Will you remember this? So this was your 37(2)(b). Now coming to a very important section, 40 clause A. Now in 40 clause A, we are supposed to do clause 1, we are supposed to do clause 1A, we are supposed to do clause 2, then clause 3, then clause 4 and clause 5. These clauses we are supposed to do. Out of them, I have already covered clause 2 with you. Any income tax on the profits of your business will not be allowed as a deduction. It will not be considered as your business expense. It will be disallowed. We have already covered this. We have already covered this also. 40 clause A, subclause 5. We have already covered this. What is clause 5? If you are an employer paying income tax on the non-monetary perquisites of your employee, do you remember? Will not be treated as your business expense, because you have paid that income tax on the non-monetary perquisites of your employee. For employee it is fully exempt under section 10(10)(c), and for you we are not going to give you any deduction under PGBP head. It will be disallowed. These two clauses you already know, but we are supposed to cover these clauses. Yes or no? These clauses separately. Now if you will understand clause 1 properly, no, clause 1A and clause 3 will be just a piece of cake for you. Very easy, very easy. Now we are going to first learn 40 clause A, subclause 1. Now what this clause says, pay attention. 40 clause A, subclause 1. What this clause says, that if the assessee is there, any person, he is making the payment for any business expense. So any expense in the course of your business or profession, for that expense you are going to get the deduction, because it was your business expense. And now for that business expense you are making the payment. Remember, which type of business expense? Any business expense. It can be commission, it can be rent, it can be any type of business expense other than salary. Other than, so are you an assessee? Yes. In your business or profession, have you incurred business expenses? Yes. What business expense? Any business expense other than salary. Now for this business expense you are making payment. Payment to whom? Payment to any non-resident or foreign company, or you are making that payment outside India. So the payment for the business expense is made outside India to any non-resident or to any foreign company. And that payment which you are making is an expense for you, but for the opposite party to whom you are making that payment, for that party, it is the income which that party is earning from India. On that, the recipient is liable to pay tax in India because it was his taxable income which you are giving him. Will he come to pay tax on that in India? The payment for your expense you are making outside India, that payment is your expense. But for the opposite party, it is the taxable income. On that income, that party should pay tax in India. But where is that party? Outside India. Non-resident, foreign company. Yes or no? Will they come to pay tax on this income in India? But don't you think you are the source of this income for him? Yes or no? At source only, you should deduct tax for us. TDS. Now on you, the government has put a responsibility. Let's say you are giving income to someone, and that someone is outside India, that someone is foreign company, that someone is any non-resident. That person is earning income from you, taxable income from you, on which the government wants to charge tax. And government is charging tax on that, but that fellow is not going to come to India to pay that tax. Neither the government can go there to collect that tax. So you are the only person who can help the government to collect the taxes on this income from him. How will you do it? Help us. Do one thing. Whenever you will make that payment, which will be income for them, yes or no, deduct some tax for the government and deposit that tax to the government. First you deduct the tax and then you deposit that tax to the government on or before the due date of filing your ROI. So whatever payment during the previous year you are making for any expense other than salary, from that payment you are supposed to deduct TDS, tax of the government, and you are supposed to deposit that tax to the government on or before the due date of filing your ROI. Then only this payment will be treated as your expense and will be allowed as a deduction. But what if you have committed some default? What default you will commit? You were supposed to deduct TDS, but you did not deduct TDS. Without deducting TDS, you made the payment. Or you have deducted TDS, but you have not deposited that TDS on or before the due date of filing your ROI. Then most welcome. You are caught in the trap of 40 clause A1. This section says that whatever payment you have made, on that you have not deducted TDS, or you have deducted TDS but you have not deposited to the government on or before the due date of filing your 100% of that payment will be disallowed. That payment will not be treated as your business expense and that will be disallowed because you have committed a TDS default on that payment. Understanding? Because of you, bloody, we have lost our tax. You have made the payment without TDS. Now, is he going to come to pay that tax? No. Can we go there? No. Because of you, we lost our tax revenue. So you also lose. Entire payment will not be treated as your business expense. The payment on which you have not deducted TDS will not be treated as your business expense. It will be disallowed. The payment on which you have deducted, but the tax deducted has not deposited on or before the due date of filing ROI. That 100% of that payment on which the TDS default is committed, that payment, 100% of that payment will be disallowed. Now there is one proviso. There is one which says that if you rectify your mistake, then the disallowance under 40A1 will be reversed. We'll allow that amount later on. If the TDS which was supposed to be deducted right now, if you deduct that TDS later on, then the amount which was disallowed right now will later on be allowed. When you will deduct the TDS and deposit that amount to the government in that previous year. So right now the amount will be disallowed because you have committed a TDS default. Now whatever amount which was which was disallowed right now as per 40A I will later on be allowed as a deduction. In the year in which the TDS is deducted and deposited, in that year the amount which was disallowed right now will be allowed in that year. What if you have deducted but you have not deposited on or before the due date? Then it will be disallowed. Later on, whenever you will deposit that amount in that year, this amount will be allowed, which we are disallowing right now. So is it a permanent disallowance or a temporary disallowance? The government is compelling you to follow TDS provisions. And if you will not follow the TDS provisions, then you have committed a default, then disallowed. And what if you have deducted TDS and then later on deposited, then the amount which was disallowed will be allowed. Understanding? You have deducted, but you have not deposited on or before the due date of filing your ROI. Then later on, whenever you will deposit, at that time, this amount which is disallowed right now, at that time it will be allowed in the year in which it is actually deposited. Easy or difficult? Will you remember this? So are you an assessee? Making payment for your business expenses. Which business expense? Any business expense other than? So you are making the payment of salary? No. Any other payment. To whom? To any non-resident or foreign company outside India. And on that payment, assessee is liable to deduct TDS and also deposits a TDS to the government account on or before the due date of filing ROI. However, if such TDS is not deducted, if that TDS is or such TDS is deducted but the same is not deposited on or before the due date of filing year, then 100% of such payment on which the TDS was not deducted, 100% of such payment on which the TDS was deducted but not deposited to the government, that 100% payment will be disallowed as per 40AI. 40AI means 40 clause A subclause 1. We call it 40AI. 40AI means 40 clause A subclause 1. Understood? Now later on, the amount which is disallowed right now, the amount which is, why it was disallowed? Because you did not deduct TDS. So later on, in the subsequent payments which you are making to that person, from those subsequent payments, if you have deducted this TDS and deposited to the government, so the year in which you will deduct and deposit that amount to the government, in that year, this amount which we have disallowed right now will be allowed as a deduction in that year. Understanding? But what if this payment was disallowed because you have deducted but you have not deposited? Then the year in which you will actually deposit this amount, in that year, this amount which we have disallowed will be allowed as a deduction. This is given in the proviso to section 40AI, which says that if later on TDS is, then the amount disallowed under section 40AI shall be allowed as a in the previous year in which it was deducted and deposited. Not in the year of tax deduction. Tax deduction is not sufficient. Later on you deduct also and deposit also. The year in which it will be deducted and deposited, in that year it will be allowed as a deduction. What if already deducted TDS is later on deposited? Then the amount disallowed under 40I shall be allowed as a deduction in the previous year in which it was actually deposited. Will you remember? This was 40 clause A subclause 1. Now what I'll do, my favorite thing, copy, and then next page. Sir, this is pink. Section is different, no? So just change the color. Everything is same except for one or two things. Now, who is the assessee? Making the payment for business expense. Which business expense? Any business expense including, where it was excluding salary, here it is including salary. Now that payment was made outside India to any non-resident or a Foreign company. Now this payment is made to any, wherever the resident is there. We don't care. If the payment is made to resident, if the payment is made to, and now that payment is an income of that resident, and the government does not trust this resident, that this resident is earning income from you, he is going to pay tax on that income to the government. So government has given you the responsibility to deduct the TDS on the payment which you are making to the residents also. Now, are you making any payment to the resident? Yes or no? On that payment, also you are supposed to deduct TDS. What type of payment you are making? Payment for any business expense, including even if the salary is paid to resident, this provision will be applicable. Yes or no? So if you are making payment for any expense including salary to the resident, on that payment you are supposed to deduct TDS. If you are liable to deduct TDS and deposit that TDS to the government on or before the due date of filing ROI. But what if you don't deduct TDS? Or you deduct TDS but you fail to deposit that TDS on or before the due date of filing your ROI. What will happen? That entire payment which you have made with TDS default, yes or no? That will not be disallowed. Only 30% of that payment will be disallowed. Earlier it was 100%. Now it is 40A IA. 40A IA. 40 clause A subclause 1A. 40A IA says that if the payment was supposed to be made to resident, and on that payment if there is a TDS default, then the payment on which the TDS default was done, that entire payment will not be disallowed. 30% of that payment will be disallowed. And the 30% which is disallowed right now, later on can be allowed also. In the year in which the TDS is deducted and deposited. Or if it was already deducted, then in the year in which the TDS will be actually deposited. In that year, the amount which was disallowed right now will be allowed as a deduction. I told you, if you will understand 40 clause A1, 40 clause A, subclause 1, you will understand this thing also. Only difference is all the payments for all the expenses, including made to resident, then the disallowance will be 100% or only 30%? Only 30%. Rest everything same. Understanding? Now do you remember this thing? What was this section? Payment for accept, copy, paste. Now, are you an assessee? Making payment for salary outside India or to any non-resident. Foreign company is not written. Why not written? Foreign company will be your employee. Can you keep a company as your employee? So foreign company, you never pay salary. You pay salary to any assessee who is not a company. Individuals, yes or no? So any non-resident individual is there, and to that non-resident individual you are paying salary outside India, and on that salary also you are supposed to deduct TDS. Did you deduct TDS? No. Oh, you deducted, but you did not deposit on or before the due date of filing ROI. Then whatever salary you have paid without deducting TDS, with TDS default, yes or no, 100% of that salary will be disallowed. No proviso. No proviso means later on, even if you rectify your mistake, proviso is not there. That salary which is once disallowed will always be disallowed. Later on also you cannot take the deduction which was disallowed right now. So what are you supposed to do? You are making the payment of salary outside India to non-resident. That salary is the taxable income of this person. Deduct TDS and deposit such TDS on or before the due date of filing your ROI. But if you don't deduct the TDS, or you have deducted the TDS but you have not deposited that TDS on or before the due date of filing your ROI, then 100% of such salary payment will be disallowed under section 40A(3). So later on, if I deduct and deposit, will this amount be allowed in that year? No. Later on, if I deposit the deducted TDS, then will this amount be allowed? No. Once it is disallowed, it is disallowed forever. This is a permanent disallowance. Understood? That is why it is kept separately and not kept in 40A(1), because the government wanted to permanently disallow this amount. Understood? Should I move ahead? Okay. Now next one was 40A(2), 40AI. Did you do 40AI? What was that? Any payment other than salary made outside India to any non-resident or foreign company, on that payment TDS was supposed to be deducted. You did not deduct the TDS, or you have deducted the TDS but you have failed to deposit that TDS on or before the due date of filing your ROI. Then that entire payment on which the TDS default was committed will be disallowed. Later on it will be allowed in the year in which the TDS is deducted and deposited, or if it was already deducted, then later on it will be allowed in the year in which the TDS is actually deposited. Done? Next one, 40 clause A, subclause 1A, 40A IA. Now you are making payment for any business expense, including to a resident, on that payment, if the TDS default is committed, then entire payment or only 30%. So here 100% of payment will be disallowed. Here the 30%, 100% of payment and 30% of payment on which TDS default was committed. Payment on which TDS default was committed. Okay. That amount will be disallowed. Both the provisions are same. Later on, if you rectify your mistake, the amount which is disallowed right now, 30% which is disallowed right now, later on it will be allowed. Okay, no? Now 40 clause A, subclause 3 talks about what? Salary, which you are paying outside India to any non-resident. On that salary, are you supposed to deduct TDS? Yes. Deposit TDS on or before the due date of filing ROI? Yes. You did not do that. You committed TDS default on salary payment also. Then 100% of such salary payment of salary paid on which TDS default was there. Yes or no? That 100% of that salary paid will be disallowed. And later on, if you rectify your mistake, then also this will not be allowed. Once disallowed, always disallowed. Understood? 40 clause A, subclause 2, income tax on profits of business or profession. This income tax will not be treated as expense and it will be disallowed. 40 clause A, subclause 2, done. Yes or no? I've already told you these things. If you remember, the same example I have given. Yes or no? Now, this thing, 40 clause A, subclause 4. 40 clause A, subclause 4. This is not that important. Even if you will not remember, then also okay. But it is there, so I will have to explain it once. Okay, no? So what this says, that assessee is an employer. He is making contributions to provident fund or any fund for the benefit of the employee. Now see, whenever you are making contribution to any fund for the benefit of employee, don't you think in future employee will get money from this fund? Right now you are making contribution. Why? Because from this fund, in future the employee is going to get benefit. The money will go to the employee. Right now, are you going to give this amount to employee? No, you are just contributing this amount to employee's fund. Contribution to RPF, contribution to ASAF, contribution to approved gratuity fund, yes or no? Right now you are just contributing to the fund, and for this contribution also you are going to get the deduction only, no? Hello sir, you are contributing to a fund, and that contribution is allowed as your business expense. But you are making the contribution to a fund, and from that fund, if the employee will get what amount in the future, and if that amount is taxable in the hands of employee at that time, so that time the TDS should be deducted from that payment. You have to make the necessary arrangements right now only, that whenever the payment will be received by the employee in future, at that time the TDS should have been deducted from that amount. Make the arrangements right now that in the future, whenever the employee will get the money from that fund, the TDS will be deducted from that payment if applicable. Yes or no? After doing these arrangements, that later on whenever the payment will be made, TDS will be deducted. After doing these arrangements only, contribute these amounts. But what if you are contributing right now to a fund where there is no arrangements are made by you right now that the TDS will be deducted later on? Then whatever contributions made by you right now to such funds will not be allowed as a deduction, will be disallowed. Will you remember this? The contributions you are making right now was your business expense. You were supposed to allow that also. But the contribution is made to such fund from where when the amount will go to the employee, at that time the TDS is not going to be deducted. You have not made any arrangements for deduction of tax out of the money which will be going to the employees at that time. Without making such arrangements for tax deduction, if you are contributing some amounts to such fund, these contributions will not be treated as your business expense, will be disallowed. Will you remember this? Sure. 40 clause A done. 40 clause A done. How many clauses are there? Subclauses? Subclause 1. Subclause 1A and subclause 3 for TDS defaults. Which defaults? And 40 clause 4 is also for TDS default. But that TDS should be deducted in the future. You have to make such arrangements right now. But without making such arrangements right now, you have contributed in any fund, those contributions will be disallowed. This is clause number 4. Two more clauses are there. Clause 2 and clause 5. Clause 2 and clause 5. In this clause also, they are telling about what? Clause 2, income tax on the profits of your business which you are paying right now. So are you paying income tax? Yes. On the profits of your business? Yes. That is not treated as your business expense, disallowed. Oh, now you are paying income tax on the non-monetary perquisites of your employee. Even that will not be allowed as a deduction. 40 clause A entirely talk about income tax. Some income tax which you were supposed to deduct. Some income tax which you are paying. Hello. Some income tax which you should deduct in future. That arrangements you are supposed to do. Entire 40 clause A talks about income taxes. Yes or no? Will you remember? All these disallowances are very, 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 very important. Because if you will see the PGBP question, no, any of this disallowance will be there in the question. We'll solve the questions, we'll come to know, na? Ready? Okay, now, wait. Now, let's go to the other disallowances. Now, there is one section, 40 clause B. Which section? Section 40 only. But now the clause is different. Now it is not clause A. We have come to the new clause. Section 40, clause B. Section 40, pay attention. This is made for partnership firms. Which firms? So who is the assessee? Are you a partnership firm? Assessee? Are you a partnership firm? Are you going to make the payment of interest? Interest on loan or interest on capital? To whom? To your partner. Sir. There is a partner. Partner in the firm has given loan to the partnership firm. Possible or not possible? So definitely this partner has given some loan or some capital to the partnership firm. And on that loan, on that capital, the firm is giving interest. So now tell me, for partnership firm, this interest is expense, which the partnership firm will claim as a deduction under the head PGBP. So whatever business income the partnership firm is earning, from that business income, the deduction for this expense will be allowed. Only if this interest was authorized by partnership deed. What if the interest paid and the partnership deed has not authorized the payment of this interest? Will not be allowed as a deduction, disallowed. 40 clause B says that any interest at any rate paid to partners, if that interest was not authorized by partnership deed, that interest cannot be claimed as a deduction by the partnership firm. It will be fully disallowed. That means if the partnership firm wants to claim this as a deduction, so interest must be authorized by the deed. So first of all, this interest must be authorized by partnership deed. So if your partnership deed says that pay the interest, then you are paying, then we are going to give you the deduction. But your deed can specify any rate. Your deed can specify 20% also. Your deed can specify 25% also. So what do you expect? That we are going to allow the full interest? No, even if it was authorized by the deed, we are going to allow also, but we are not going to allow more than 12%. So maximum interest which the firm can claim as a deduction is how much? Interest up to 12%. But only if it is authorized. Now what if the deed is authorizing 10%? So firm is giving how much? Full 10% will be allowed, because deed is authorizing interest at a rate which is less than 12%. What if the deed is authorizing 12%? Fully allowed, because maximum rate is 12%. That interest is only paid. What if the deed has authorized 20%? So actual interest paid is 20%. But the deduction will be available only 12%. Excess will be disallowed. That will be added back to your profit. You have reduced 20%. No, you are allowed only 12%. Extra 8% which you have reduced, no, add it back to your profit. That we are not going to allow as a deduction. Add back. So authorized by deed and should be maximum 12% per annum rate. Yes or no? Any excess interest, what did I say? Any excess interest paid by the firm over and above 12% will not be allowed as a deduction from the profits of the partnership firm. It will be again added back. If you have reduced, it will be again added back. So tell me, are you a partnership firm? Have you calculated your profits? And you have calculated your profits after taking the deduction of 20% interest. Tell me, 20% is allowed or not allowed? Add back 20%, because it is not allowed. How much is allowed? Reduce 12%. Automatically 8 will be added. Don't do the netting, otherwise you will commit mistake. I know that. So this is time and tested thing which I am telling you. If out of the profit the interest claim was 20%, 20% is allowed or not allowed? Add it back. It is not allowed. Why you have reduced? Add it back. This is not allowed to be reduced. Then add it back. Yes or no? How much is allowed? So reduce 12%. So first add 20%, then reduce 12%. Automatically net 8% will be added. Understanding? Yes or no? But what if in the profits interest was not taken as a deduction? then only take 12% deduction. Only reduce 12%. Understanding or not? Now see, for partnership form, we have already had a discussion now. Partnership form discussion is over. Now for example, I'm giving you one example. Partnership form is giving interest at the rate of 15% and the amount of interest is 3 lakhs. Assuming that this interest was authorized by partnership deed. Tell me, how much the firm will pay? How much the firm will pay? 3 lakh. Will the firm get 3 lakh rupees of deduction? How much deduction the firm should get? Maximum 12%. So interest, if calculated at 15% was 3 lakhs. So if you calculate on 12%, it should be 2 lakh 40. How much is the excess interest? 60,000. Now what will happen? See, pay attention. Either you add 60 or do one thing. Have you reduced 3 lakhs? First add 3 lakhs. Because 3 lakh is not allowed. How much is allowed? 2 lakh 40 is allowed. Reduce 2 lakh 40. So first add back 3 lakh and then reduce 2 lakh 40. Alternatively, you can just add back 60 also. But that shortcuts I don't recommend. Because sometimes in these shortcuts you commit mistake. It will take just 5 seconds extra time. But your answer will never go wrong. Understanding? The partnership firm, the thing is done. What happened here, you know? Partnership firm wanted to reduce 3 lakhs. So first 3 lakh is added. And then how much was allowed? Reduce only 2 lakh 40. That means on that 60,000, which was not allowed, it was added back to the profit. So now the partnership firm's profit will increase by 60,000. On that 60,000, the firm has already paid tax. And how much was allowed? 2 lakh 40. Yes or no? That 2 lakh 40 will be allowed. That means the firm's profit will reduce by 2 lakh 40. On that 2 lakh 40 of the profits, the firm has not paid tax because it was allowed as a deduction. 2 lakh 40 of the profits of the firm was allowed as a deduction. On that 2 lakh 40, the firm has not paid tax. 60,000 got added, which was not allowed. On that, the firm has already paid tax. Understood? Now tell me, who will get this interest? Who will get this interest? Partner will get this interest. How much? Firm is bloody giving 3 lakhs. So partner will get how much? For firm it is an expense. For partner it is an taxable under the head PGBP. Specific charge. I left this point. That time I told you that I'll cover this point with 40 clause B. And right now we are in 40 clause B. 40 clause B, we are checking the limiter. Yes or no? Now we had a discussion about partnership form. That is given in 40 clause B. But now we are coming out of 40 clause B and we are talking about the partner. Now tell me, are you a partner? How much you are receiving? Is it your income? This will be your PGBP income. Because anything coming from your partnership firm in which you are a partner, meaning the owner. So business is giving something to the owner will be PGBP income of the owner. As per section 28, this 3 lakh will be your business income. But just imagine one thing. Out of this 3 lakhs, on 60,000, the firm has already paid tax because it was not allowed in the hands of firm. So that 60,000 already got added to the profits of the firm, and on that 60,000, the firm has already paid tax. If you consider this 60,000 also as your income, on that, the tax will be charged for the second time. So do one thing. When you will show your PGBP income, no, only show 2,40,000. That means the amount which was allowed as a deduction in the hands of partnership firm will be taken as your PGBP income. The amount which was not allowed in the hands of partnership firm ignore that amount. Don't show that amount as your income, because on that amount we have already got tax from the partnership firm. When we added that amount, when we disallowed that amount, so this automatically got added to the profits of the firm, on which the firm has already paid tax to us. How much amount was allowed in the hands of firm? On that profit the firm has not paid tax, which you are receiving as income. On that you pay tax under the head PGBP. We will consider that amount as your PGBP income. So out of 3 lakhs, how much is allowed? 2 lakh 40. That will be treated as your business income. Out of 3 lakh, how much was not allowed? 60. That is not your business income. Ignore that, because on that the firm has already paid tax. This was already added in the profits of the firm. Understanding? Now, will the partner always get interest, or some other things also he can get? Salary, bonus, commission, any type of remuneration, yes or no? So now let's talk about remuneration. A firm is giving what? Remuneration. Remuneration to partner. Now tell me, for firm it is expense. For firm it is. Now firm will get the deduction. This expense will be allowed under the head PGBP, out of the business income of the firm. So whatever business income the firm is earning, from that business income, this expense the firm can take the deduction. But wait, must be authorized by the partnership deed. If your deed is not authorizing, why are you paying? That remuneration we are not going to allow. So first of all, this remuneration must be authorized by partnership deed. First condition. Second condition, it must be paid to working or active partner. There are other types of partners also. Dormant partner, sleeping partner. So if the partner is a sleeping partner, if the partner is a dormant partner, but he is not doing any work, and for that if you are giving him what? Remuneration, we are not going to allow that. My deed. Your deed can say anything. Your deed can say anything. Even if your deed says that pay the remuneration to sleeping partner, we are not going to allow that. The remuneration should be given to do some work. And if he is working partner, and for that work which he is doing, if you are going to give him remuneration, only that remuneration we are going to allow. Meaning, first of all, remuneration must be authorized by deed. Second, it must be paid to working partner. Only then the remuneration will be allowed. But wait, the remuneration which you are paying to the working partner authorized by deed can be any amount. Your deed can authorize any amount. So what do you think? If your deed is authorizing, give full profits as what? Remuneration. So we are going to allow full profits? No. There will be a limit. So what was the limit on interest? What was the limit on interest? Maximum 12%. Here the maximum limit under section 40 clause B, you will have to compute. You will have to compute this limit. There is a way in which this limit has to be calculated. I am just going to tell you that. Okay, no? So interest maximum how much allowed? Even if authorized by deed, more than this we are not going to allow. Remuneration also same. Even if remuneration is authorized, given to the working partner, we are not going to allow more than this amount. More than limit. And what is the limit on the remuneration? That you will have to calculate. So to calculate this limit of remuneration, first you will have to calculate what? Book profit. First you will have to calculate the book profit of the firm. Which profit? Out of that book profit, on first 6 lakh rupees of book profit. On first 6 lakh rupees of book profit, 90% or 3 lakh, whichever is higher. This limit has been changed last year. So from last year, this limit is first 6 lakh of book profits, 90% or 3 lakh rupees, whichever is higher. And if your book profit is more than 6 lakh, so any book profit in excess book profit, yes or no, over and above 6 lakh, on that calculate 60%. So this amount plus this amount plus this amount, both taken together is the maximum limit under section 40 clause B. Now let's take one example. Let's take the book profit. You calculate it. How to calculate this book profit? I'm going to tell you. 1 minute. 1 minute. First of all, tell me, you calculated the book profit. Amount of book profit was 15 lakhs. How much? On first 6 lakh, calculate 90%. That will be 5 lakh 40 or 3 lakh, whichever is higher. So 5 lakh 40 fix. Then what is the book profit over and above 6 lakh? 15 lakh minus 6 lakh, 9 lakh. On that 9 lakh, calculate 60%. 5 lakh 40 here also. 540 plus 540. 10 lakh 80. This is the maximum remuneration. If the book profit of the firm is 15 lakh, out of that book profit, the firm can maximum give how much? 10 lakh 80,000 to all the working partners taken together. This is not the limit for each working partner. It is the limit for all the working partners taken together. Yes or no? Now wait. What if the book profit of the firm was 9 lakhs? First 6 lakh, 90%, 5 lakh 40 or 3 lakh, whichever is higher. 5 lakh 40. How much is the book profit over and above 6 lakh? 3 lakh. On that 3 lakh, calculate 60%. 1 lakh 80. 1 lakh 80 plus 5 lakh 40. 7 lakh. If the book profit of the firm is 9 lakh, out of that, the firm can maximum give how much? 7 lakh 20 as remuneration. Understanding? What if the book profit is 5 lakhs? Is your any book profit over and above 6 lakh? So this point will not come. 60% you are not supposed to calculate because no book profit is above 6 lakh. Entire book profit is within 6 lakh. What is the book profit? 5 lakhs. 5 lakh into? How much is that? 4 lakh 50 or 3 lakhs, whichever is. 4 lakh 50 can be the maximum amount of remuneration which you can give if your book profit is 5 lakhs. What if your book profit is only 3 lakhs? 90% of 3 lakhs, 2 lakhs 70 or 3 lakhs, whichever is higher. What if your book profit is 1 lakh? 90% of 1 lakh, 90,000 or 3 lakh, whichever is 3 lakhs. What if your book profit is not book profit, it is a book loss? 90% of book loss will be a negative amount or 3 lakh, whichever is 3 lakhs. So minimum 3 lakh will be allowed, but maximum it can go to any amount. Yes or no? So what is this? You learned how to calculate the limit, but the limit is calculated based on what is book profit. Simple. All the business incomes of the firm minus all the business expenses of the firm, including depreciation and interest, up to allowable limit, but without taking deduction for remuneration, because remuneration only you are calculating. So to calculate remuneration, calculate the PGBP income of the firm without giving effect to remuneration. So you will take all the business incomes of the firm minus all the business expenses of the firm minus the interest also to the partner up to allowable amount. Yes or no? Minus the depreciation also on the assets used in the business of firm. Whatever is there is your book profit. This you have to calculate without giving effect to remuneration. That is what? Book profit. Easy, difficult? Now tell me, if the book profit was 12 lakhs. How much? First 6 lakh, 90%, that will be 5.4 lakhs or 3 lakhs, whichever is higher, 5.4 lakhs, and anything over and above 6 lakh is 6 lakh. On that 60%, 3.6 lakh, how much? 9 lakhs. If the book profit is 12 lakh, maximum remuneration given can be 9 lakh. Now, if the firm has actually paid 7 lakhs, is the firm paying the remuneration within the limits? Fully allowed. What if the firm is actually paying 11,50,000? Because the deed was authorizing 11,50,000, so we have paid 11,50,000. Bloody, you cannot pay 11,50,000. Your limit only is, so any excess paid will be disallowed. So how much you have reduced? 11,50,000. Is it allowed? No. Add it back. How much is allowed? Reduce 9 lakhs. Automatically 2,50,000 will be added. Understood? Now the same logic which you applied earlier. How much the partner will get? 11,50,000. How much the partner will get? 11,50,000. Is it coming from the partnership firm? Anything coming from the partnership firm is your PGBP income. If it is interest, if it is remuneration, anything coming to you from the partnership firm is your PGBP income. So how much is your PGBP income? 11,50,000. But wait. In that 11,50,000, some amount was allowed to the firm. On that, the firm has not paid tax. Only that amount will be treated as your taxable PGBP income. Some amount which was not allowed in the hands of firm. How much? 2,50,000. That was already added to the profits of the firm. Hello. That you don't show as your income. That is not your income. So in the hands of partner, what did I say? In the hands of partner, even this remuneration will be treated as PGBP income. Yes or no? But only to the extent allowed in the hands of firm. The remuneration which was not allowed in the hands of firm will not be treated as your income only. Ignore that. Will you remember this? Sure, sir. This is the end of 40 clause B. Okay. We are going to solve many questions now. Okay. See, before we move now, illustration 8 was done, no? Illustration 8 was done. Next illustration is 9. Page number 270. After 5 minutes, let me complete other sections also, then I will come to illustration number 9. 10 also I am going to do a little later. Okay. 11th. 2 marks MCQ. 2 marks MCQ. A firm has paid how much as a remuneration to its, for the previous year 25. This is the actual remuneration paid. Now you have to check the limit. If the limit is higher, then this amount will be fully allowed. If the limit is lower, then the remuneration up to the limit will be allowed. Yes or no? Now, in accordance with the partnership deed. Oh, very good, very good. This is in accordance with the partnership deed, meaning this amount was authorized by the deed. Good. And it has a book profit of, what are you going to do? Come on. First 6 lakh, 5 lakh 40 or 3 lakh, whichever is higher. 5 lakh 40. How much is the excess? 4 lakhs. On that 4 lakhs, that will be 2 lakh 40. 2 lakh 40 plus 5 lakh 40. Maximum that much remuneration can be given. How much is given? Excess will be disallowed. 70,000 will be disallowed. Only 7 lakh 80 will be allowed. Understanding? So as per section 40 clause B, 70,000 remuneration will be disallowed. Okay, sir? Now, illustration number 12. Mark this illustration important. Without looking at the solution, Start. See, Rao and Jain, a partnership firm consisting of two partners, reports a net profit of 17 lakhs. Wait. This 17 lakhs is before remuneration, before depreciation, before interest. But did I tell you book profit has to be calculated after taking all the deduction for expenses, after depreciation, after allowable interest, but without taking deduction for. So out of this net profit, deduction for salary is not taken, very good. But why have you not taken the deduction for depreciation? It should be allowed. Why have you not taken the deduction of interest? That should be allowed, but only allowable. So from this net profit, take the deduction for depreciation, take the allowable interest, you will get book profit. You will get, don't take the deduction for remuneration. Because without taking the deduction for remuneration, see, if book profit is given, no, please directly take that book profit. If they would have told you this 17 lakhs is after, this before word is there, no, this before, this is very important. Meaning these items are not yet reduced. So to calculate the book profit, what are you supposed to reduce? You are supposed to reduce depreciation, reduce it. You are supposed to reduce allowable interest. First of all, allowable interest you will have to calculate, and that you reduce. But are you supposed to reduce remuneration? No. To calculate book profit, remuneration should not be reduced. So don't reduce the remuneration right now to calculate the book profit. If it is not reduced, no need to reduce. Yes or no? But what if instead of before, they would have written after? Then all these items are reduced. Remuneration was not to be reduced. Add it back. Depreciation was to be reduced. Already reduced. No need to do anything. Interest is reduced. But the interest is reduced at a higher rate. Add it back. Calculate at allowable rate. Reduce that. If I would have been the examiner, I would have been definitely done that thing. So what we are going to do, first this question we are going to solve as it is. Then I will change one information in the question. And accordingly, we'll check how the answer will differ. Yes or no? I have to make you ready for worst come worst scenario. If this is there, it is not necessary that the institute is, the moment you will see what Rao and Jain in the exam. You'll say, Ayyo, same question we solved in the class, same question ICI study material, Rao and Jain. And maybe you might also remember the answer, because before the examination you might have revised this question. And the ICI is very well aware of all these things. Small twist in the exam they will do. You don't read the question properly, no. Small twist the ICI will do. Same question they will put in the exam. Instead of what before, they will use the word after. Entire solution will change. Understanding or not? And how that solution will change, we are going to see. Don't worry. Okay, no? So first of all, tell me. We are supposed to calculate what? Book profit. A book profit. Now to calculate this book profit, what are we supposed to do? We are supposed to take all the business incomes, all the business expense, profit will be there. So that profit is already given in the question. And from that we are supposed to take depreciation. We are supposed to take the deduction of allowable interest. I am not talking about interest. I am talking about allowable interest. Without taking any deduction for remuneration, whatever profit of the firm will come will be book profit. So net profit is given in the question. Net profit as given in the question is how much? 17 lakhs. So we are assuming that all the business incomes of the firm are taken minus all the business expenses are reduced, and this profit is there. But from this profit, since the word before is written, meaning these three items are not yet reduced. So we have to reduce these three items. No, I will reduce only two items. Number one, less what? Allowable interest. So what was the allowable interest? See, in the question they are saying interest on capital at 15% and the capital eligible for interest is 5 lakhs. So actually the interest the firm will pay will be how much? 5 lakh into 15%. Firm is actually going to pay how much? 75,000. But that 75,000 is not allowable because that 75,000 is at the rate of 15% which the firm is actually pay. How much is allowable? 12%. 12% of the capital. You have to calculate that, and that is only the allowable interest. That is 12% of 5 lakhs. Tell me how much? This was not allowed, so we are taking it as a deduction. We are reducing it. Okay. Then less what? Depreciation. Depreciation under section 32 as given. If it was not given, I would have to calculate this depreciation. And you are very lucky that they have not given you the details to calculate the depreciation. If I am your examiner, I will give you the details to calculate the depreciation. First calculate depreciation. So I'll check that whether you know depreciation or not. Then that calculated depreciation will be allowed here. But you are very lucky that the examiner does not ask all these things. He has directly given the depreciation. So just reduce that. How much is that? 1 lakh. And don't reduce the remuneration. If it is not reduced, very good. You're not supposed to reduce that to calculate the book profits. Yes or no? So how much is the amount now? 14,90,000 everyone got? First part of the answer is done. Now second part. Second part is what? Allowable working partners remuneration. Allowable working partners remuneration. Yes or no? And for that, what are you going to do? You are going to take the book profit. Simple. So first take what? Book profit. As calculated above. How much? 14,90,000. See, if you want to present it like this, you can present it. But what I usually do, I make a small chart like this. It is easy to understand. Okay, no? On 6 lakh rupees, you are going to calculate 90%. That is 5 lakh 40. This 5 lakh 40 or 3 lakhs. Whichever is higher. So higher amount is 5 lakh 40. Now 14,90,000 minus 6 lakh will give you 8,90,000 into 60% of that will be how much? 5 lakh 34,000. Can you add both of them? Maximum limit under section 40 clause B is 10,74,000. Now this maximum limit, and you are supposed to see actual remuneration to partners. How many partners are there? 2 partners are there. Per partner how much? And that too also per month. For how many months? Total is 9 lakh 60. 10 lakh 74 or 9 lakh 60. Whichever is lower. Whichever is. So therefore deduction for remuneration is equal to 9 lakh 60. Full remuneration given will be allowed because that is within the limit. Understanding? This way, if you present, you will get full marks. Okay. Now, third part they have not given in the question. Write down part C in the question. Go to question, and here part 3. Write down part 3. One more thing you are supposed to calculate. Also compute the taxable PGBP income of the firm. Also calculate the taxable PGBP income of the firm. Tell me, what will be the PGBP income of the firm? 17 lakhs is the profits. Yes or no? Out of that, will the firm get any deduction for depreciation? Yes. Will the firm get any deduction for interest? Yes. And now the firm will get the deduction for remuneration also to calculate the PGBP income. Yes or no? Take the deduction of 9 lakh 60. Whatever remains is the taxable PGBP income. Understood or not? So now deduction for remuneration is 9 lakh 60 and the C part is taxable PGBP income of the firm. We are going to start again from net profit. How much was the net profit? See what I am going to do, in this net profit, the same things I will reduce. Understanding, no? Copy and paste. So from this net profit, I will reduce these two items. And also I will now reduce less. What? Remuneration. Allowable remuneration is 9 lakh 60. What is the balance amount? 5 lakh 30,000. This is the taxable PGBP income of the firm. Very difficult, no? One small case study like this they will give in the exam, 2 marks, 6 marks MCQ. Or if this question is given full-fledged, then 5 to 4 marks, 4 to 5 marks question will be asked like this. So this question should come for 15 marks. No, maximum 4 to 5 marks, not beyond that. Okay. Now see, write down. In your solution, write down. Everyone done till here? Yes or no? Write down. If in the given question, the word after was used, for net profit instead of before. If in the question word after was used for net profit instead of before. So put after in inverted comma, underline. Put before in inverted comma, underline. Then, write down, then the answer to the above question would have been as follows. As follows. Now see, first A. What you are supposed to calculate? Book profit. So to calculate book profit, your net profit is now after. Yes or no? Earlier it was before. Yes or no? Now we are using the word after. Now see, if the net profit is after what? After remuneration. But for book profit, remuneration should not be deducted. So you will add back that remuneration. After reducing remuneration, this is the net profit. But remuneration should not be reduced to calculate the book profit. Why have you reduced? Add it back. Yes or no? So what are you going to do? 17 lakhs. 17 lakhs was your net profit after claiming remuneration. So add remuneration. What was the remuneration? Remuneration, 2 partners into 40,000 per month into 12 months. So 9 lakh 60 you are going to add back. See, don't add back depreciation. Why? Because for calculating the book profit, the net profit should be after depreciation. So it is after depreciation. So depreciation is already reduced. No need to again reduce and no need to again add back. Getting my point? Net profit should be after interest also, but after allowable interest. How much amount you should have reduced? 75. Why have you reduced 75? Add back 75. How much should be reduced? 60. Reduce 60. Net 15,000 will be added back. Getting my point? So what are you going to do? Add interest on capital actually paid. Because that would have been reduced to calculate 17 lakhs. Yes or no? So that was how much? 15% of 5 lakhs. That is 75,000. That I have to add back. But interest will be allowed, no? On capital. Allowable interest. Interest on capital. Allowable has to be reduced. And allowable is how much? 12% of 5 lakh. That is 60,000. That you are going to reduce. Now whatever amount will be there, this will be your book profit. How much? 26 lakh 75,000. Understood? Just see how your book profit has changed now. Instead of 14 lakh 90, it is 26 lakh 75,000. Understood or not? Now second part. Part B. Part B. What are you going to compute? Allowable remuneration. Allowable remuneration to working partners. To working partners. So for that, what I will take? Book profit. Calculated as above. 26 lakh 75,000. Out of that, 6 lakhs into 90%. Give me 5 lakh 40 or 3 lakhs. Whichever is higher. So higher is 5 lakh 40. And out of 26 lakh 75,000, 6 lakh was there. Yes or no? So how much is the excess? 20 lakh 75,000. On that I will calculate 60%. That is how much? 12 lakh 45,000. Done, sir. So this 5 lakh 40 plus 12 lakh 45. Add 17 lakh 85. So maximum limit under section 40 clause B is 17 lakh 85,000 or remuneration actually paid 2 into 40,000 into 12, 9 lakh 60. Is this 9 lakh 60 within the limit? This or this, whichever is lower. So 9 lakh 60 was what? Deduction, no? For the remuneration. So deduction for remuneration will be 9,60,000. In this case also, the amount will be 9,60,000. Fortunately, it is 9,60,000. Amount can be different also. Who knows? Yes or no? Now, limit C. Sorry, part C. Taxable PGBP income of the firm. We will start with profits. So net profit. It was 17 lakhs, no? After it was 17 lakhs. What are you going to do? You are going to do the same things which you have already done. Yes or no? But the same things you are going to address. Wait, 1 second, you are supposed to wait. This interest I will keep together. Okay, I will first add interest. Then I will add remuneration 9,60,000 and then reduce remuneration. How much? 9,60,000. How much you paid? 9,60,000. First add it back. Is that 9,60,000 allowed? Yes, reduce it back. So even if you don't do anything, even if you don't write this 9,60,000 twice, then also your answer is correct. 9,60,000 was allowable. 9,60,000 was taken as deduction. So no need to do anything. Either you write this or you don't write this. Your answer is same. But sometimes it will put you in trouble. So what I am going to do? I am going to keep both the things. So that you should know that what is the format you should have followed. Yes or no? So remuneration paid was how much? Remuneration paid and reduced. That you add back. Because I don't know that how much remuneration is allowable. So I will first add back. Now I came to know that how much was allowable? 9,60,000. Then I will reduce that 9,60,000. But what if the remuneration paid and reduced was 12 lakhs? So first I will have to add 12 lakhs. And then how much was allowable? 9,60,000. I will take 9,60,000. Fortunately, what is happening here? The amount paid is only allowed. So first whatever is paid, add it back. Yes or no? And how much is allowable? 9,60,000. Understood? So remuneration. This is remuneration actually paid, which was reduced. So I am adding it back. And remuneration allowable, I will reduce that 9,60,000. So now tell me how much is the total? 17 lakh? 15,000. This is the taxable PGBP income. Understood? Please follow this format. Please follow these steps. Now should I give you one question to try at home? Same question you take. Okay. Same question. Ravan Jain. Instead of 17 lakhs, now you take 12 lakhs. Now you take 12 lakhs. But this will be your homework, huh? Now what will happen here, you know? When you will calculate the limit, no? Now the limit will be lower. And the remuneration paid, 9,60,000 will be higher. So some remuneration will be disallowed. Understanding? Don't take 12, take only 10 lakhs. Take only 10 lakhs. Take only 10 lakhs. So it's the same question, nothing changed. Okay? Only change the amount of remuneration. Instead of 17 lakhs, now you are going to take 10 lakhs. First you are going to solve as if the 10 lakhs is before. And then you will solve as if the 10 lakh is after. The same two calculations which we have done, you are going to do the exact same calculation, but instead of taking 17 lakhs, now you are going to do 10 lakhs. Tomorrow you are going to bring the answers. Yes or no? No, instead of 12, I said take 10 lakhs only. I told to rectify, instead of 12, take 10 lakhs. Okay. So, homework you will do that. Okay. Now let's go to the next part of the chapter. Pay attention, guys. Now we are moving really very close to the end of this chapter. Okay, now? Tomorrow we'll wind up this chapter and we'll start with the capital gains day after tomorrow. But tomorrow, entire lecture will go. Majority of the part will go to wind up this chapter because miscellaneous part is also there. Miscellaneous part of PGBP. Okay. So tomorrow this chapter will come to an end. If the time will remain, we'll start with capital gain. Otherwise capital gain day after tomorrow. Okay, no? So wait. 40 clause B. I've already covered this. 40 clause B. Guys, in this 40 clause B, can you see the limit which I have calculated here? Hello? Can you see this limit? This is 6 lakh. This is 3 lakh. Any book profit over and above 6 lakh. On that you are going to calculate 60%. Now let's be very careful now. Now these disallowances which I am going to tell you now, in the exam, if you will see PGBP question, 100% these disallowances will be there in the question. Without these disallowances, usually the questions are not framed only. So if you will see PGBP question, these disallowances, 2 or 3 disallowances which I am going to discuss now. Out of them, first two, most IMP. Okay. First is 40A, subsection 2. By the way, how many disallowances we have covered so far? 38, done. 37 2B, done. Section 40, clause A, all the subclauses, done. 40 clause B, done. Section 40, done. Now we are coming to a new section. New section is 40A. New section is 40A. And now in 40A, subsection 2 is there. In 40A, there is subsection 2. Now this subsection 2 says that if you are an assessee and you are making payment for your business expense, see, you are incurring any business expense now. Which business expense? Any business expense. Commission, salary, rent, this, that. Any business or profession expense. So is it your business expense? Yes. Are you going to claim this expense as a deduction? Yes. But the payment for this business expense you are making to specified person, meaning your related parties. So any payment of the business expense you have made to the related parties should be within limits. It should not be more than the reasonable amount. Or it should not be an unreasonable payment. If we come to know that you have made the payment for business expense to your related party, see, that is your business expense. We are going to allow that. Even if you have made that payment to other parties also, then also we would have allowed it. There is no problem. We are going to allow you even if the payment is made to related party. Just because the payment is made to related party, it does not mean that it is disallowed. It will be allowed. But since it is made to related party, no, you or your related party would try to fool us. So we are trying to safeguard ourselves from the kind of manipulations which you can do. So any business expense, for that the payment is made to related party, that payment should be reasonable payment. The payment which should actually happen, only to that extent the payment should be done. If you are making any excess payment, then that excess payment will be disallowed. If you are making any payment which is absolutely unreasonable, that entire unreasonable payment will be disallowed. That is what 40A2 says. 48.2 says that if the payment for any business expense is made and that payment is made to related party and that payment is in excess of reasonable amount or the payment is unreasonable, that then entire excess amount or that unreasonable payment will be disallowed. We are not going to consider this payment as your business expense. We are going to disallow that. Understanding? Why is that disallowed? For example, I want a office on rent. I'm a chartered accountant. I want to start a office, CEO office, okay, no? So that CEO office, instead of buying, I'm taking that office on rent. Now I know that whatever rent I will pay for the premises which are used for my business or profession will be allowed as a deduction under section 30. So I can take the deduction of this rent out of my PGBP income. Yes or no? So from this profession, I am earning 10 lakh rupees. So what is my income from my CA profession? 10 lakh rupees. Out of this income, I will take the deduction for the rent which I will pay for office. My CA office, the rent will be paid. That rent will be allowed as a deduction under section 30. Now every month if I pay a rent of 30,000, if I would have taken this premises on rent from someone else, so the rent of such kind of office should be 30,000. So 30,000 into 12, 3,60,000. This is the reasonable rent which I should have paid. Yes or no? But what I did, this premises I have taken on rent from my father. And to my father, I'm paying a rent of 80,000 per month. How much? 80,000 into 12 will be 8,40,000. So instead of taking the deduction of 3,60,000, how much deduction I am taking? So my business profits are coming down and I am saving taxes. And you won't believe, I will get the money back from my father also. To my father, how much rent I am paying? To my brother, say for example, I have taken the property on rent from my brother. So to my brother, how much rent I am paying? 80,000. I will tell my brother that, bro, even you know that the rent of this property should be 30. But how much I am paying? 80. Since you are my brother, no, I don't have any love for you. That much love I don't have. That bloody, the rent should be 30. Why would I pay 80? But since you are my brother, no, you can help me to save my taxes. How come? See, the rent should be how much? 30. And even you would have got 30. Yes or no? If I would not have taken the premises from you, you would have given the premises to someone else. How much rent you should have got? 30. So I am also giving you 30. But since you are my brother, no, take 5,000 extra. But remaining 45,000, withdraw and give it in the form of cash. I can do this setting with my brother because he is a related party. Now tell me, how much I have spent? How much I have spent? 80. Will I take the deduction of 80? But 45,000 is coming back to me. I'm fooling the government by doing this thing. So am I making the expense, making the payment for expense? How much? 80. To my related party, is that payment reasonable? How much excess payment I am doing? If they checked that the rent of this premises should be how much? 30. So the unreasonable payment, excess payment is how much? 50. 80,000 paid, but the reasonable amount is how much? 30. Yes or no? 80,000 I have paid, but they checked that premises like this are available on rent for only 30,000. Why the bloody hell sir is paying 80,000 for this premises? Oh, payment is done to bro, and some amount out of that he would have definitely taken from bro, and claiming 80,000. Sir is trying to fool us. How much excess payment sir is doing? Over and above 30,000, which is a reasonable rent. 50 as per 48.2 disallowed. Disallowed. What I would have done, I would have claimed the deduction of 80,000. I would have reduced my PGBP income. My tax would have been reduced. How much tax I would have saved, by spending 35,000, I am giving how much rent to my brother? 30. Okay, give me back 50. But since you are helping me, no, take 5,000 extra. So total rent spent by me will be 35,000 into 12, will be 4,20,000. But I am going to take the deduction of 80,000 into 12, 9,60,000. How much excess rent I am claiming as a deduction? 5,40,000. 5,40,000, 30% tax I will save. 5,40,000 into 30%. To save 1,62,000, I can very well give some amount as commission to my brother, some extra amount as a rent to my brother. What he will do? He will, out of 80, he will keep 30 as rent and 5,000 extra he will keep. But in that case, sir, your brother will have to pay tax. But my brother is following 115 BS. On that entire 9,60,000 which he is earning as income, first of all, he will calculate his house property income, he will get standard deduction, he will get interest deduction, entire amount is not going to be taxed, and whatever tax which will be there, that entire tax he will claim in the form of rebate, because up to 12 lakhs, under 115 BSE, he is not liable to pay any tax. So we both are fooling the government like anything. And now tell me, on 5,40,000 which I have claimed extra as my expense under the PGBP head, I am saving 1,62,000 of tax. And I can do this adjustments, I can do this kind of settings only if I make the payment of business expenses to my related parties. So the government, the income tax department is very cautious when it comes to allowing the deduction for business expenses which you have paid to the related parties. That time immediately 48(2) comes in the picture. Now they will check that if I have made the payment of any expense, they will ask me, okay, this payment is also made to Suraj. Oh, surname is Thakkar. Thakkar, Umang Thakkar, Suraj Thakkar. Who is Suraj Thakkar? Oh, your bro. Rent you are paying to your bro. Immediately they will be alert. And the moment they will be alert, now they will find out. How much rent is paid per month? 80,000. 80,000 rent for what? Oh, office premises. What is the area of your office premises? Where your office premises is located? Yes or no? Every detail they will ask, and they will inquire that in this area, for this type of premises, how much rent is going on. They will immediately come to know that the fair amount of rent, if I would have taken any other property, similar type of property, I would have paid how much? 30,000. And how much I am actually paying? Immediately 50,000 they will add back in my profits. 48(2) it will be disallowed. One more example. For example, I have my younger sister. Okay. So I am in the profession, I am in the teaching profession. So I am teaching. Along with teaching, I am running my own online classes also. So online classes, I take taxation lecture for students and all. So for that, sometimes I have to get my creatives designed, posters, etc. I have to design. Okay, no? So that designing work and everything, I get it done from my sister. Instead of getting the things done from outsiders, I'm getting the things done from my sister. Now, if I would have got the same things done from others, I would have paid 20,000 rupees maximum for the full year. But how much I am paying to my sister? 1 lakh rupees. So that I can claim 1 lakh rupees as a deduction. Understanding or not? But how much is the genuine amount which I should have paid? 80,000. Sorry, 20,000. How much excess I am paying? So this, who will decide that how much is the genuine amount? That I don't have to decide. That assessing officer will decide based on the needs of my business, based on the operations of my business. He will have that idea. Various other things he will keep in mind to determine that how much amount I should have paid for this expense. How much expense I should have incurred. If he comes to know that I should have paid only 20,000 and I'm paying how much? 1 lakh. Immediately he will add back 80,000 to my profits by applying the provisions of 40A2. Understanding? Wait, I'm paying salary. I'm paying salary to 4 staff. How many staff? The name of the staff. My father, my mother, my younger sisters, both my younger sister I am paying rent. Salary. I am running a small shop. It is my business. From that shop I am earning business income. So to reduce this business income, what I will do? I will try to claim maximum expenses. And what expense I am trying to claim now? Salary. I am paying salary to my staff. Staff who is working in my business. What is my business? A shop. And how big is my shop, you know? Only 10 by 10. In this shop, bloody, will you keep your stuff? You will stand, and on top of that you will keep 4 employees also. Wow. Actual need of your business is not keeping 4 employees. Still you are keeping 4 employees and paying them what? Salary. The thing is little bit fishy over here. We don't believe you. Understanding? So all these things will be kept in mind, and they will come to know that how much amount should be the fair amount, reasonable amount for this expense which you should have paid, and how much you are actually paying. If you are paying any amount over and above that reasonable amount, unreasonable amount, that amount automatically they will add back to your profits. It will be disallowed as per section 40 clause A subsection 40A subsection 2. And who is this related party now? Who is this related party? If I am making payment to this party is a related party, 40A2 will be attracted. But who is this related party? If I am an individual, if I am any relative, who is a relative? Not defined here. So I will have to take the definition as per 2 subsection 41. 2 subsection, my spouse, brother, sister, lineal ascendant, lineal descendant. That's it. Lineal ascendant means generations before me. My father, his father, yes or no? They are my lineal ascendants. Lineal descendant means my kids, their kids, they are my lineal descendants. So if I am an individual, assessee is an, so who will be the related party? My relative. My relative will be the related party. Who is my relative? Spouse. If the payment is done to spouse, this section will be attracted. If the payment is done to my brother, this section will be attracted. If the payment is done to my brother, this section will be attracted. If the payment is done to my lineal ascendant or my lineal descendant, this section will be attracted. If the payment is excess payment. Understanding? Now only my relatives are related party. No. Any concern, any business concern will also be my related party if in that business concern I am having substantial interest or any of my relatives are having substantial interest. So if there is a concern, that concern will also be treated as my related party. If in that concern I am having substantial interest or any of my relatives are having substantial interest. What is the meaning of substantial interest? 20% or more profit sharing. If that concern is a company, then 20% or more voting rights. So in any concern, what did I say? In any concern, if the assessee or any of his relative is also, assessee is having a substantial interest or relative is having a substantial interest, then that concern will also be treated as related party. Any payment made to that concern will also be covered by 40A2 if it is excess payment. Understanding? This is the case when the assessee is a individual. What if the assessee is HUF? AOPBY. HUF? AOPBY? Company or partnership firm. If the assessee is HUF, AOPBY, partnership firm or a company. Who will be the related party? Any member, any partner or any director of the assessee will be the related party. Wait, not just them. Any relative, what did I say? Any relative of that member, any relative of that partner, any relative of that director is also a related party. Any payment made to that relative of member, partner or director will also be covered under this provision. Not just that, any concern, what did I say? Any concern where I am having a substantial interest or my member, partner or director is having a substantial interest or any relative of my member, partner or director is having a substantial interest, even that concern is also a related party. So who is a related party? Member, partner, director is my related party. Any relative of that member, partner, director will also be a related party. Any concern where I am having a substantial interest or my member, partner, director is having a substantial interest or relative of the member, partner, director is having a substantial interest, even that concern is also a related party. So you have to be very careful who is a related party. If to this related party payment is made for any business expense, payment is made for any business expense, if that payment is genuine amount, then it will be fully allowed. But if that payment for the business expense made to these related parties is more than the genuine amount, more than the reasonable amount, then that excess amount, unreasonable amount will be disallowed as per 40A2. Understanding who is related party, I have already told. Individual, relative of the individual, or any concern where the individual or relative is having a substantial interest. Then HUF, AOPBY and firm. HUF, AOPBY, firm and company, any member, partner or director, even their relatives, even a concern where the assessee, member, partner, director or their relatives are having substantial interest, even that concern will be treated as related party. If the payment is made to these parties, payment must be reasonable. Any excess payment will be disallowed. Will you remember? Sure. 40A2 done. Now come to 40A3. Very easy section. Very easy section. And you have already done something like this. Payment in excess of 10,000 in a day to a person by way, and the payment is more than 10,000 in a day to a person. That payment is made by way of any mode other than prescribed mode. Then that payment will not be treated as your business expense, will be disallowed. That we have already seen for capital expenditure. So now the payment is for business expense other than capital expenditure. So any payment for business expense you are doing, the payment is done for business expense only. This business expense we were going to allow you. But what you did, this business expense, the payment you done more than 10,000 in a day other than prescribed modes, then this payment will not be treated as your business expense, will be fully disallowed. Entire payment which you have made in excess of 10,000, yes or no, that entire payment will be disallowed. So if the payment made was 50,000 and that payment you have made by way of cash, entire 50,000 will be disallowed. Understanding or not? So business expense was how much? 5 lakhs. Business expense was how much? Entire 5 lakh will not be disallowed. Out of that 5 lakh, what payment you have made? 50,000. Is this payment more than 10,000 paid in cash? 50,000 will not be treated as your business expense, will be disallowed. What about the remaining 4,50,000? If that remaining 4,50,000 is paid by prescribed modes, that will be your business expense. You claim it. Understanding? Any expense of the business or profession other than capital expenditure. Other than, because for capital expenditure, the same thing is there in proviso. to section 43(1), which we have already seen. But other than the capital expenditure, other than the cost of asset, other business expenses incurred in the business. For those business expenses, if the payment is made in a day to a person, and if that payment is more than 10,000, make sure that the payment is made by prescribed mode. Only then it will be allowed. But what if that payment is made by any modes other than prescribed modes? Then that entire payment will be disallowed. Will you remember this? Sure. One small question. What if the payment is made for salary and the payment is more than 10,000? Disallowed, because it is other than prescribed mode. What if the payment is made for commission? Disallowed, because the payment is more than 10,000, other than prescribed modes, will be disallowed. What if the payment is made for advertisement expenses? Any type of expense, if the payment is more than 10,000, if the payment is more than other than prescribed modes, will be. But if you are making the payment for transportation charges, freight charges, if you are making the payment for transportation charges or freight charges, then the limit is not 10,000, limit is 35,000. Up to 35,000, any modes will be okay. But if the payment is more than 35,000, only then prescribed modes. Yes or no? For all the business expenses, limit is 10,000. Only one business expense. Payment of business expense, which is transport charges, freight charges. Yes or no? To any transporter. So if the payment is made to any transporter, goods transporter, and that payment is up to 35,000, any mode you will pay, we will allow. But if the payment is more than 35,000 to that transporter in a day, then that payment has to be prescribed modes. Understanding? Sure. Pakka no? Wait. My question is now, you are buying one asset. Are you buying one asset? At the time of buying the asset, you are making the payment of transport cost. The transportation cost is not for normal business operation, for transporting your goods. Okay, no? The transportation expense is for at the time of purchase of the asset. Don't you think that the transportation cost will be added to the cost of asset? If that transportation amount was 50,000 and you have made it in cash, will not form part of actual cost of the asset. Understanding? What if that amount was 30,000 and you have paid in cash? Understanding what I am trying to tell you? Will it be considered as a part of actual cost? Still no, because there you are not supposed to see the limit of 35,000. Entire actual cost. What did I say? Entire actual cost of the asset, any component. If the payment is more than 10,000, there you are not going to apply that limit of 35,000. Yes or no? Any other case. For example, for regular transportation of your goods from your factory to your warehouse, you are making the payment to transporter. 20,000 payment in cash, allowed, because the payment was within 35,000. Any mode, it is allowed. What if the payment was 30,000? Then also allowed. Then also allowed, because the payment is up to 35,000. Any mode, it is allowed. Yes or no? What if the payment is 45,000 and that payment is made by cash? Disallowed. Full 45,000 disallowed, because the payment for transportation charges is more than 35,000 now, and you are paid by other than prescribed modes. It will be disallowed. Understanding? Now see, if the transportation charges paid for acquiring the asset, transportation charges paid for acquiring the 8,000, paid in cash, add in the cost. It will form part of actual cost. Up to 10,000, any mode will be treated as actual cost. No need to apply the proviso. That part will be treated as a part of actual cost. Yes or no? What if the transportation charges were 12,000 and you paid in cash? It will not be treated as actual cost, because there you are supposed to apply the limit of 10,000 for any part of actual cost, including the transportation cost. The payment is more than 10,000 has to be by way of prescribed modes. There, please don't apply the limit of 35,000. Getting my point? This nobody will tell you. And one question, no, in the examination, they tested this point. To buy the asset, purchase price was 5 lakhs. Purchase price was 5 lakhs. Paid by way of prescribed modes. Will it form part of actual cost? Yes or no? So in the actual cost of the asset, we will take 5 lakhs. Why? Because the payment is 5 lakhs is by way of prescribed modes. No problem. Will be taken as actual cost. But to get the asset in the factory, what you did? You paid the transport and freight charges also. Even that is to be added to the cost. Yes or no? How much transport charges you paid, you know? 25,000. How much? In cash. Now you will immediately remember, sir had said, transportation charges up to 35,000, any mode will be allowed. So it is 25,000, any mode allowed. 25,000 you added in the cost. So now what actual cost you have taken? 5 lakh plus 25,000. Your answer is wrong. Actual cost is 5 lakhs. The 25,000 transportation charges was for this asset, was a part of actual cost. You should have paid it by way of prescribed modes because the payment was more than 10,000. There you are not supposed to see the limit of 35,000. Did you pay by prescribed modes? No. And the payment was also more than 10,000. Even if it was a transport charges, will be disallowed. Will not be added to the cost of asset. So what is your cost of asset now? You should take the depreciation on this 5 lakh. Majority of the students, in fact 95% of the students committed mistake over there. 95, no, more than that. Almost every student had committed that mistake. They took 5 lakh 25. Why? Transportation charges up to 35,000, any mode is allowed, will be added to the cost. Added. Everyone added. Will you add? Sure, no? From here we'll continue tomorrow. Bye bye.